So today we're going to start at where the markets closed yesterday. And the reason being is this is a perfect example. We'll have good news for the economy. It's bad news for mortgage rates. So folks, my name is Dan Frio. I'm actually the host of the Rate Update, and I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. My slogan's one application, one credit pool. I'm going to compare your loan to over 30 different lenders. How? I'll give you that at the end of this video. You're here for these things over through here, and let's get to it, folks. So here's what happened yesterday. We had some manufacturing numbers. Well, some numbers on the economy, and they were fantastic. It's saying the economy's chugging along better than it has for years. Don't believe me? Well, let's get over to the data that we looked at. So here's what freaked out the market yesterday. This ISM number right through here. So the ISM numbers means how robust is the manufacturing in the U.S. at this time? Well, it was chugging along in the 40s. Well, 40s means, okay, you're chugging along. High 40s, okay, it's okay. Anytime you peak over 50, that means the economy's chugging along great. So what we got yesterday is 52 from 47. That's a huge move. So then they're thinking, okay, the economy's doing really well. That means corporate earnings are going to go well, but that means the economy is going to do well and the employment numbers aren't going to suffer. So how's all this tie together? So here's what the Federal Reserve looks at. They look at the inflation numbers and they look at the unemployment rate. So they look at this thing recently and they're like, okay, this thing isn't looking too good, so we got to cut. We know inflation's high, but we got to cut because of this. Well, now you get this manufacturing number comes in. It's like, okay, this is really good. So that means the unemployment rate's probably not going to move anywhere worse from here. And the PCE, well, we're worried about that down the road. So the markets yesterday took off. The Dow Jones was up over 500 points, but that did tick up rates just a little bit. So what's the after effect of all this, and what news do we have out today? Well, let's get over to that right through here. So today, here's what we have. The FOMC member, Bowman. We have a Fed member, Bowman, going to speak today, and that always freaks me out because you don't know what they're going to say. Then we have the JOLT index, how many job openings and labor transfers there are. This gives us kind of a bead on the jobs market. Then tomorrow, we got ADP, and you know how I feel about that. But what we're hoping for is this week, we were going to get the new unemployment number to fill in this gap. Well, the government shutdown's actually halting that. So we're not going to get that. So let's take a quick picture of what I think is going to happen. Well, let's get over to see what the Federal Reserve's most likely to do, and then I'll give you my thoughts on this. So in 43 days, the Federal Reserve is going to meet. What are they going to do? I want to go to the probabilities, but let's go. There's a 91% chance now that they're not going to do anything. Well, let's look at the probability charts through here and see if there's any chance of a rate cut anytime soon. And it's still saying there's nothing in the cards until June. So what this calendar is telling us is at the March meeting, Federal Reserve's not going to cut rates by a 91% chance. In the next meeting after that, almost an 80% chance. And then we're going to have a whole new cast of characters at the Fed. So will they cut then? Well, that's what we're going to have to monitor. So I got one tool for those out there. If you're looking to buy a house, did you ever hear of that buy down calculators and stuff like that? Can you buy down the rate, 2-1 buy downs and things like that? I actually created a calculator. People were so confused on how this works. So go down below. I have a whole list of calculators down there. If you use the code DAN, D-A-N, all capital, you'll get it for free. Check it out. It's pretty cool. But what do you do if you're a homeowner right now thinking, okay, I'm in this, my rate's at 7.5. These rates right now are 6, but I think they're going to go down. Danny, you even told me they're going to go down. Well, do me a favor. Put your information in here. Okay, what I did on our website is I created a tool for you homeowners out there. What I want you to do is put your mortgage information up there. Let me know two things. What rate you'd like to refinance, that's one. And then two, how much money per month you would like to save and look at refinance. So here's what I mean. Let's say you're at 7, you're like, okay, when they hit 6, call me. But if I can save $300 or $400 a month, well, call me on that too. So it'll trigger both of those. So if you're a homeowner, check out that. If you're looking to buy a house, check out our 2-1 buy down calculator and all the other calculators down below. But now let's get over to what my thoughts are in the markets for the next couple days. Okay, so the first I want to go over to the economic calendar. I don't think the JOLT index or anything's going to shock us today. So I think the markets are just going to be steady as a pancake. If you go over to the bond market, here's what happened yesterday. Remember, here's what we watch if we watch mortgage rates. Well, if you're new to the channel, here's what we watch to figure out mortgage rates. We don't really watch this, and we don't go to Mortgage News, or we don't go to just Yahoo Finance. We watch the mortgage bond. You can see there's 2 of them up here now. There's one that says up there UMBS, and there's one behind me that says GNMA. What this is the government bonds. This controls like loans like FHA, VA, and USDA, kind of, sort of. And those over there, there's the conventional loans. You can see somewhat of a correlation, but today, this one's doing a little bit worse than that one over there. So all you have to understand is this. If the bond price is going down, rates are going up. So we love when the price is going up. So yesterday wasn't a good day, but today we'll see how that fares. It's -4 today over through here on the conventional, and it is -9 over here on the Ginnie Mae loan. So that means mortgage rates most likely might tick up just a tad today, but I don't think it's going to be anything crazy. So what do you do if you're looking to buy maybe down the road? I don't really think mortgage rates are going to change all that much, because if you look at it, the economy's doing pretty good. The unemployment numbers, they're going to be a little bit here and there based on the data that we get, but nothing to really push the Federal Reserve to do anything. So mortgage rates in the bond market should be pretty darn steady for the next few days, next few weeks, until we get some data that could really push these things. So if you're a homeowner right now, check out our tools. If you're looking to buy a house, reach out to us. We'd like to get you pre-approved. Make sure you're not getting just pre-qualified. And make sure you're getting approved in the program that's best for you and not the bank. So we're going to go over all the programs with you, your credit scores, your guidelines, all your options, and then let you choose what best options there are for you. And the good news is, folks, my slogan, like I said, one application, one credit pool. We're going to compare your loan to over 30 lenders. How? Why? Well, check out our videos. Me and Alan come in once a week on Wednesday, and we show you behind the curtains exactly how we do this. But here's kind of the briefing of it. I work at a bank that provides me a federal license in all 50 states as well as Puerto Rico. That's fantastic. But what they also did is said, okay, we need more programs, and we need rate options. So what they did is set up with almost 40 other lenders. These are banks, credit unions, and just mortgage companies to provide you the best rates, the best fees in the markets. So if you can do this on your own, God bless you. Don't waste our time. But if you need some help out there, please reach out to us. We would love to help those out there that really need help getting through this whole process, because it can be a little daunting and a little confusing. But now, hopefully, if you're a homeowner out there or a home buyer, heck, you could be a realtor, loan officer. Now when your client comes up to you and says, Dan, what's going on rates? You can now say, hey, I know exactly what the heck's going on with those. And why? Because of Dan Frio. So thanks for watching, folks. I appreciate it. Subscribe down below. We hit 40,000 subscribers about 2-3 weeks ago. Now the next tier is 50,000. So help me get there, help spread the word, and join me tomorrow, me and Alan, to show you behind the scenes on. We can give you a rate quote live on our live event. Thanks for watching. Stay warm out there, folks, and I'll see you at the closing bell to see how this mess ends for the day. Thanks for watching. Bye-bye.